Welcome to Cannabis Accounting's Tax Web series sponsored by CMATES.org. My name is Gordon Gates and I'll be your moderator today. In today's video presentation, we'll be introducing you to Internal Revenue Code 280E, or simply 280E. Each year as CPAs and enrolled agents, we cringe at the thought of what the new tax code changes will bring. It's even more imperative that we keep up with the various changes as it relates to 280E. We receive more than 1,000 streams of information from various sources on a daily basis as we continue to look for ways to take advantage of any tax breaks as it relates to 280E. Staying on top of important changes will not only help reduce your tax liability, but ultimately keep you out of jail. As a marijuana business owner, you are the person signing your tax return. When you know what starts hitting the fan, you need to be sure that your tax professional's in your corner. Here at Cannabis Accounting, we stand behind every tax return we do. When the code was written and passed, 280E was designed to penalize drug traffickers or anyone that appeared on the Schedule 1 or 2 CSA list. Irregardless about the fact that states have approved the growing and sale of marijuana, the feds will still adhere to 280E. Therefore, 280E affects only your federal tax return for your business. Your state return will still be able to deduct what's called normal and ordinary business expenses. And we know what? 280E is going to remain in effect until Congress approves a change. Keep in mind that the IRS is the messenger in this case, but they wield a pretty big hammer. So what is it you can deduct on your tax return? This slide is designed for growers and manufacturers of MMJ byproducts. Let's chat first about cost of goods sold, or COGS. This can be made up of a variety of expenses depending on the type of business that you are. According to Investopedia, COGS is classified as the direct costs attributable to the production of the goods sold by a company. This amount includes the cost of the materials used in creating the good, along with the direct labor cost used to produce the good. It excludes indirect expenses such as distribution costs and sales force costs. COGS appears on the income statement and can be deducted from revenue to calculate a company's gross margin. Wow, now that's a mouthful. Now there are various methods of accounting systems that are available for businesses to select from. The methodology states that businesses must use an inventory method of accounting whenever the production, purchase, or sale of goods is an income-producing factor. So now under an inventory method, costs related to producing, acquiring, storing, and handling goods for sale are not currently deductible. These costs are included in the cost of inventory and deducted when inventory is sold. Generally, the inventory costs are added to the beginning inventory amount and reduced by the cost of the inventory on hand at the close of the year to compute the cost of goods sold for the whole year. That means if you're a grower or a manufacturer of MMJ products such as edibles, waxes, oils, hash, etc., you must use this method of accounting. Now, under IRS Code Section 471, all taxpayers are required to include direct costs in the cost of inventory. Direct costs include the net invoice price of the inventory, which can be reduced by trade or other discounts, transportation, and other necessary charges incurred in the acquiring the possession of the goods. Direct production costs typically include materials and direct labor. Direct labor costs include such items as basic compensation, overtime pay, vacation and holiday pay, sick pay, payroll taxes, workers' comp insurance, and unemployment payments. Now, indirect costs are broken down into three categories, and we're going to cover two of these three categories for you today. Category 1 costs are expenses that are required to be included in the cost of inventory. These include repair expenses, maintenance, utilities, rent, indirect labor and supervisory wages, indirect materials and supplies, tools and equipment not capitalized, and costs of quality control and inspection. When preparing your tax return, make sure your tax preparer understands the differences in all of the various category costs. Now, Category 2 costs for indirect costs, these are expenses that cannot be included in the cost of inventory. And they include off the list such things as your normal business expenses, including marketing, advertising, selling, interest, research and experimental expenses, depreciation and amortization, income taxes, your general administrative expenses, and your officer payroll. Wow. Again, these are expenses that cannot be included in the cost of inventory. So what am I left with? Well, here's the secret sauce that we've got out there, okay? And this is what's going to get you the additional write-offs. Now, warning, do not try this unless your accountant has the industry expertise to support your entries. Things such as depreciation, employee benefits, officer wages, read the list that we've got there. Now, some of these, as you notice, were on the Category 2 costs. While here under Category 3, if you've got the secret sauce and know how to allocate, you're going to be able to take some of these costs and use them against your cost of inventory. That's going to means that you're going to be able to take cost of goods deductions on these. Now, what happens if you're not a grower, but you're a retailer, like a dispensary or a delivery? Well, unlike growers and manufacturers of MMJ products, retail and delivery owners must use the cash receipts and disbursements accounting method. Okay, so what does that mean? Well, your cost of goods expenses are based on what the cost of your flower is that you purchase from your grower or manufacturer for MMJ byproducts. However, okay, big however, under UNICAP, which stands for Uniform Capitalization, you can utilize some of the expenses from Category 3 to increase your overall cost of goods sold. This accounting method must be stated and supported in your accounting records and your tax return. Let me say that again. The accounting method must be stated and supported in your accounting records and your tax return for you to be able to take advantage of this. So are you confused yet? The majority of accountants and tax professionals are. The medical and recreational marijuana business is not your normal business. You must understand the effects of 280E both from an accounting perspective and a tax perspective. So let's talk a little bit about competent tax professionals, because all businesses are required to file annual tax returns on which they're required to list the source of their income. Doing so, however, appears to be a risky matter for taxpayers engaged in the marijuana business. Stating the actual nature of the underlying business on a filed tax return is an admission by you on a document that you sign under the penalty of perjury that you've now committed a federal crime. This is true in spite of the fact that the possession or distribution of marijuana for medicinal or recreational purposes is legal under your state law. By choosing not to file a tax return, you're subjecting yourself to federal prosecution for failure to file. What does that mean? Well, that means penalties for this can be extreme, up to 100% of the tax liability you owed. So in other words, if you owed $100,000, you now owe $200,000. Plus, you're going to get some jail time. Now, don't go down this path. If you do, you're dooming yourself to eventually going to jail. Now let's talk a little bit about Title 18. Title 18 of the United States Code states that whoever commits an offense against the United States or aids, abets, or counsels a Schedule I company is punishable as a principal. Wow. Okay, so that means as your accountant or your tax professional, I'm culpable too for what happens and what's reported on your tax return. To give you an idea, the governing group for CPAs, which is called the AICPA, has deemed that any CPA working in this industry is subjecting themselves to possible sanctions. That's why there are so few CPAs that are involved in this industry. The fewest that are understand the risk and realize the need for our services. Don't think that you'll be able to go walk into the local H&R Block or Liberty Tax and they'll know how to handle your tax return. I guarantee you they will not. Okay? You're going to have to find somebody that is an expert in this industry. So what are we doing? I'm telling you to do your homework. There's several magazines and online marketing places with accounting and tax services being advertised. Ask them the questions that you just learned here in this presentation. Next thing is referrals. Hey, you know someone in the business? Find out who they're using and if they're happy with them, because obviously if they're not in jail yet, somebody must know what they're doing. Find out if the person is a CPA or an enrolled agent. Why? Because chances are at some point you will get an audit request. And CPAs, enrolled agents, and attorneys are the only tax professionals that can represent you before the IRS. Have they gone through an audit and what were the results? Have you checked out their website? Is it professionally done and does it provide you with the warm, fuzzy feeling that these guys know what they're talking about? Or was it just kind of thrown together or geez, when you entered their website, you found nothing about cannabis until you really screened through all of the screens and website pages that they had. Remember, you are ultimately responsible for signing the tax return. Are you comfortable with the numbers that appear in there? Are you confident that your accountant and tax professional have an expert understanding of 280E? Let's chat a little bit about cannabis accounting. Our firm was actually built on non-cannabis clients over the last 10 years. In early 2010, we started getting inquiries about doing accounting and taxes for a few of the medical marijuana dispensaries and growers here in California. As the word spread about our services, we made a decision in 2014 to open up a new division that was dedicated strictly to the marijuana industry, and thus cannabis accounting was born. Now, our team of CPAs and enrolled agents are qualified and authorized to provide accounting and tax preparation in all 50 states. We have the ability to represent you before the IRS and state agencies, and we've done so on many occasions for our clients. From IRS audits to sales tax audits to payroll audits, we've been through the trenches with our clients, fighting tooth and nail for every deduction we've taken. Every tax professional, as I've talked about in our office, takes a minimum 60 hours of tax classes per year to ensure that we understand all of the rule changes and how they may or may not impact your business and your personal tax return. We have more than 1,000 RSS feeds coming in daily from across the U.S. so that we can keep abreast of all the changes that are occurring both federally as well as in your state. If something's happening, chances are someone here in our office knows about it. If you've been audited, you know what the cost of a defense can be. We've introduced Tax Shield, a new program that fixes your audit fees on any return that we complete for you. We stand behind our work and we're willing to put a number on it. Visit our website at cannabisaccounting.com to find out more about Tax Shield. We know that a majority of this is new to you, and quite honestly, a lot of it may just be mumbo jumbo. As a marijuana business owner, you wear a lot of hats as you try to get your new venture off the ground and running. The last thing you want to worry about is having to figure out what's a Category 1 cost versus a Category 3 cost. Find a good accounting firm. Whether that's Cannabis Accounting or someone else, hire them and sleep well at night knowing that your numbers are being taken care of properly. Be sure to check out our latest ebook, IRS IRC 280E Simplified. The Kindle version is available on Amazon.com for $69.95, or you can order a PDF version directly from our website for $19.99. And if you're an existing client, simply email us and we'll send you the PDF copy for your reading enjoyment. We know you have a choice when selecting an accounting firm and tax professional. We encourage you to check out our additional web series on our website, or you can sign up for one of our seminars. We appreciate you stopping by today, and make it a great day.